If you run a dental practice in Victoria, the equipment you invest in represents a significant part of your business assets, and how you claim depreciation on those assets can make a material difference to your tax position each year. Today, I want to walk through how the ATO treats dental equipment depreciation, what the effective lives are for the most common items, and where the instant asset write-off fits in. There are two main categories of assets in a dental practice. Division 40 covers plant and equipment, which includes all the clinical and operational items like dental chairs, X-ray machines, autoclaves, handpieces, intraoral cameras, and computers. These use the ATO's effective life schedule from Tax Ruling 2023/1 and can be depreciated using either the diminishing value method or the prime cost method. Division 43 covers capital works, which is the fit out of the premises itself, things like plumbing for dental chairs, cabinetry, flooring, and structural modifications. Capital works depreciate at 2.5% per year over 40 years, and the instant asset write-off does not apply to Division 43. The ATO's effective life ruling gives dental chairs a 10-year life, which translates to a 20% diminishing value rate. OPG panoramic X-ray machines also have a 10-year life at 20% diminishing value. CBCT scanners, which are the cone beam computed tomography units used in implant planning and orthodontics, have a 10-year life at 20%. Intraoral X-ray units have a 5-year life at 40%. Dental handpieces have only a 3-year effective life, which gives a 67% diminishing value rate, meaning they are largely written off in 2 to 3 years. Autoclaves and dental lasers have a 10-year life. Intraoral cameras and curing lights are 5 and 3 years respectively, and computers are 4 years. The instant asset write-off is available to small business entities with an aggregated annual turnover below $10 million. For the current threshold, which is $20,000, any individual asset costing less than that amount can be written off in full in the year of purchase rather than depreciated over its effective life. So a set of handpieces costing $4,200 is immediately deductible in full. A dental chair at $18,500 sits just under the threshold and qualifies for immediate write-off under the Small Business Simplified Depreciation Rules. A premium chair at $28,000 or a CBCT scanner at $140,000 sits above the threshold and must be depreciated over its effective life. The fit-out is a separate discussion entirely. When you spend $80,000 or $90,000 fitting out new consulting rooms, that expenditure falls under Division 43 as capital works. It is not eligible for the instant asset write-off and must be claimed at 2.5% per year over 40 years. However, any individual items purchased for the fit-out that are plant and equipment, not structural, can be claimed separately under Division 40 at their applicable effective life. For zero users, the practical implication is that every asset needs to be set up in the fixed asset register with the correct effective life, method, and opening value. If assets are being posted directly to expense accounts, your asset register does not reflect the true position, and your depreciation claims may be wrong in both directions. TrueTally works with dental practices across Victoria to set up and maintain accurate fixed asset registers in Xero, reconcile depreciation to the asset register, and ensure your bookkeeping is ready for your accountant's tax planning and depreciation schedule work. Book a free call at truetally.com.au or call 4681599950